Good morning, everybody. Welcome to today's Morning Coffee with Mike. Today, we are talking about volume and price having an edge. This is the latest hot topic of the day in the world of FinTwit. So let's jump right in. I'm going to share with you exactly how I've learned to use volume and price as an edge. I'm going to share some charts with you. We'll field a bunch of questions as we go. And well, let's get this show started here. Let's bring Instagram over here, place it right in front of the charts. Let me know if you guys could see it, and I'll bring up the charts over here on YouTube, Twitter, LinkedIn, and Facebook. And I'll also get the Twitter chat up here. And if you guys have questions, please let me know as we go. All right. Let's make this chart a bit bigger here. All right, so price and volume as an edge. So what we're looking at right here is a weekly chart. And from this weekly chart, something that when you're trying to figure out an edge, well, with just looking at this and trying to say, well, there's just a bunch of squiggly lines all over the place. Well, what do we do? What you want to do first is to take in the bigger picture, right? So you're taking in the full picture. Generally, I like to start on the right side of the chart and look to the left and see if there's anything that I could spot on the right side to the left side. What I want to try to find are trends in price and in volume. So what I'm looking for is there an uptrend, right? Is there an uptrend? And I'm looking at the last couple of weeks. So if I'm looking at, say, the last 8 weeks over here, and I'll just put on some annotations made of, jump the gun a little bit here for you guys, but that's okay. Let's remove all the drawings and I'll show you exactly what I did and how and why. So these last several weeks here, right? There's probably about 10 to 12 weeks in there. We're seeing each bar make higher highs and higher lows. This overall trend is starting to move up. Something else that you might notice on this particular chart here is this red line. That red line is a 10-week line. That is starting to trend higher as well. This gray line, that's pushing higher too. That's the 40-week line. So when we start to see trends moving higher, then that's something that we're going to pay attention to. When we're looking at volume and price, we're going to jump down here. Right? So this is price, this is volume down here. So when you see spikes, volume spikes like this one, like this one, like this one over here, you want to see what price is doing with those volume spikes. And in each case, in this one here, volume to the upside, price to the upside, volume spike, price to the upside. Volume spike over here, price to the downside, but what's it doing on the daily time frame? Let's jump over to the daily. On the daily, what we have is price had run up very quickly over here on the right side of the chart. Then, as price came closer to that red line on here, since it's a daily chart, we're looking at a 50-day moving average. What we're seeing is price came down, price spiked again, and then it got real tight right around that 50-day moving average, right? Do you see that? And volume started to taper off in a big way. Right? You had heavy duty selling here, heavy duty selling there, and then all of a sudden, where's all the volume? The volume is gone. And then you have a few days where you're just drifting sideways, drifting sideways. Ah, man, hold on 1 second. Let's get Instagram going again. Okay, you guys on Instagram, let me know if you're able to hear me okay. Let me know if you're able to hear me okay over on Instagram. Had a little technical difficulty. The problem is that I like to keep the Bluetooth on my phone, and Melissa just grabbed the car to go somewhere, and the Bluetooth was still connected. So let me know if you're able to hear me. All right, thank you, Naveed. Naveed says that he could hear me. Great. So what's happening over here, right? So you get the price decline, you get the volume decline, and then all of a sudden, since that's happening right around that 50-day moving average, you're able to bust out of there, and this made for a great entry. Actually, saw this happening yesterday, right around the 50-day moving average, and I took a position on this. This is Ethereum, and broke right out of there. The reason why I like to trade aggressively when I'm looking at crypto is because crypto has a way of moving very, very quickly and not giving much of a chance. So when it's consolidating right around the 50-day like that, I like to hop in and I'll set a stop, and I'll set a stop a few points below, so like right around 1750, just in case if you get a sudden spike down, or not even that, but just if the depending on what exchange you're on, you might get filled at a different price. So I'll be looking to exit somewhere down here. All right, so let's take a look at some of the questions that came in while we were talking and ranting a little bit. Bunch of people over here on IG. Please share your thoughts on Nifty India. Sure. Send me over some tickers that you want to look at, and we can look at some Indian stocks. Sure. Nazeep, do you have a group for signals? It's not a signal service. We provide education. So I'll share what I'm looking at and why, and the stocks that I'm trading in our elite program. The purpose isn't to just say, "Hey, buy this, buy that." I'm sharing my plans and my research and why. Uh, Actually, well, why don't we flip the screen over here and see one of the examples here. So this is Mobileye. This is another example of a trade that I'm in. Let's get you guys back over here. And so Mobileye broke out over here. I've been in this trade since Tuesday, April 18th. Broke out. I got to scale out. I like to sell a little bit once I'm up about 5% and then take a bit more off when I'm up 10%. And since then, price has traded sideways. So part of the reason, or part of the way that we're different than an alert service, is that I'm giving the plans of what I'm doing, but I'm also sharing why I'm doing what I'm doing. And not only that, each day I'm coming in and I'm sharing what the updated plans are. So sharing exactly where I'm planning to scale out of the trade, how I'm raising my backstops and why, what danger signals I'm seeing. And we spoke about danger signals the other day. Danger signals, it takes a bunch of them to prompt any kind of an action. Think of it like a weighted scale. If you have stuff on one side and you have stuff on the other side, you want to see which way the scale is going to tip in order to prompt an action. So it would take me 7 danger signals at this point, since we're in the what I'm considering the mid game of the trade. 7 danger signals to prompt an action. Other than that, my objective is to get my stop to break even, which it's already at just about, and then allow the trade to continue to run. Let's see, what other questions have come in? If you want the Nifty, or if you want me to talk about Indian stocks, I'm glad to. Just type into the chat and let me know what Indian stocks you have, and we'll pull up whatever you want. Bobby, welcome. The Path to Profit. Bobby, everybody go follow Bobby Campos over at The Path to Profit. Let's see. What else do we have here? Question from Claudia. What do you think about stop hunts by institutionals? I think that personally, I think that it's like the boogeyman, that it doesn't really exist. And part of the reason why I feel that way, I think that if we're placing our stops at a proper spot, so if we are looking at where we're going to place our stops on the chart, and we are placing it at a spot where there's multiple layers of confluence, then if we're stopped out of a trade, then it should be a spot where the trade is going to break down. So for example, let me bring Instagram back over here. I might be giving you guys motion sickness with how much I'm moving Instagram, but let's move Instagram back over here, and let's bring this chart back up. So if we were to take off all the annotations and you're looking at this chart, where would you say is the most recent swing low on this chart? If you don't know what swing low is, we could discuss that another time. But if you can see where the swing low is, then type into the chat and let me know. Is the most recent low over here? Is it around 37? Is it over here at around 38 and a half? Maybe over here at 39? Maybe it's over here at 41, or would it be over here at 43? Well, where do you think? I'll tell you what I think. Well, what I think is that the most recent swing low is right here at around 43. Now, when I'm looking at this, I'm going to also see, well, what other confluences are around that $43 level? Well, on this chart, there's this purple line right there. That's a 21-day exponential moving average. So if price were to fall to right below over here, and to get to this, it would have to take out the past 3 days of lows. It would have to take out the 10-day exponential moving average. It would have to take out the 21-day exponential moving average. And if we go over and take a look at a weekly chart, it would have to make a fresh low on the week this week. The idea is to have multiple layers of confluence around where we're going to place our stop. And then if the stop does get taken out, then think of it like a seatbelt, right? We wear seatbelts to protect us from our worst case scenario. If we're placing a stop, like let's say instead of placing my stop below over here, let's say I'm placing it, I don't know, just at 45 for just the sake of placing it at 45. Then if I were to do that, and let's put a line over here, right? So let's draw this and get this. Let's make this, I don't know, let's make it purple. Dotted line right there. So let's just say that we placed our stop there. It's kind of right in the middle of all the price action, right? It doesn't make a whole lot of sense to place a stop there because you're right in the middle of all the action. It's likely to get taken out just by the price moving as it's shown to have moved over the past few days, over the past couple of weeks here. So when we're placing our stop, it's best to place it outside of that price range. And that's why for right now, I've got mine right down over here at 42.90, which places it below that low just a little bit and also below a whole number. That's how I like to do it. That's how I like to strategize. So that way, if it does get taken out, then there's multiple reasons for it to be taken out, not just the one. Let's see. Other questions. What are those EMAs? All right, so we've got a bunch of them on here. Bunch of EMAs. So I've got the 5 EMA, that's the thin gray one, the 10 EMA, the 21 EMA, the 50 SMA, and that is the 100 EMA. I also look at a 200, but Mobileye is a relatively recent IPO and it hasn't been trading for 200 days yet. Some kind words from IMYNCP. Your posts are really amazing. Thank you so much. I'm glad that you're enjoying them. Here's a question or a comment from Adam. Adam says, "Hello, I have known the market for a year, but I feel lost. I do not know the right way to become confident in myself and in my decision about analysis of signals." Okay, I'm glad you brought this up, Adam, because we're going to help you right here, right now. Okay, so you've been trading for a year and you're not confident yet. Trading, well, let's phrase it this way. If you were to choose another profession, right? If you were to look at becoming a doctor, if you were thinking about becoming a lawyer, or let's say that you wanted to be a professional athlete, or you wanted to be a musician or an artist, how long do you think that it would take those things to, or for you to get really good at those things? It would probably take you several years to start to become good at it, right? And there would be a process for learning how to become great at those things. When most of us think about trading, when most of us start to get involved in trading, that idea that there should be a process to get good kind of flies out the window, doesn't it? When we just think that we should be able to open up an account, place a trade, and then all of a sudden the riches just fly into our lap. Unfortunately, it doesn't work that way. So part of the idea is understanding that it's going to take time to get good at this. Great. So, well, what's your next step? Well, how would you start to get good at anything? If you wanted to be a musician, if you wanted to be an artist, if you wanted to be an athlete, if you wanted to be a doctor or a lawyer, well, what do you think that you would need to do? You'd probably need to study mechanics, right? The like how to do the thing. You'd need time. You'd need somebody to give you a guide, to be your guide, to be a coach, to be a mentor, something. So somebody to teach you what to do. Um, yeah, for any kind of profession, if you want to be really good, if you don't want to just be a dabbler, there's a lot of people that dabble in art. There's a lot of people that dabble in sports. There's a lot of people that dabble in music, right? Like I've got a guitar sitting in my closet. That doesn't mean that I'm a musician. It doesn't mean that I'm great at the guitar. It doesn't mean that I'm going to be playing professionally on stage, but I have these things. If I wanted to be great at it, then I would need to start taking lessons. I would need to get a coach. I would need to have, there would be a specific process for how to get great at playing the guitar. Same thing for trading. So what do you need to study to get great? Well, I just wrote a book on it. It's called The Trading Mind Wheel, and it lays out a blueprint for what you need to get great at and gives you a lot of the ways how to get great at these what I consider to be 8 core skills that everybody needs in order to uh, trade well and trade effectively. And it's not just my opinion. I gave that book to a variety of trading champions. They read it. They all agreed. Uh, People like Mark Minervini, people like Mike Webster, people like Leif Serrata, people that have not only managed millions of dollars, but people that have returned hundreds and thousands of percent over the years. So it's the skills that we need to acquire and the mindsets needed to acquire those skills that we need. So my recommendation to you would be to go grab a copy of the Trading Mind Wheel, read that, and not just read it passively, but do the exercise. There's exercises in pretty much every chapter, a variety of exercises in there. So go do the exercises. It'll walk you through the different mindsets needed, the different skills needed, how to acquire those skills, and and that will be a great start. So, um, speaking from somebody too that has struggled early on, it took me 10 years to finally start to get good at trading. I want to share that with you because uh, after 1 year, it can feel like a long time, but trust me, on a if you're watching something like this, you're already well ahead of the game. You're already reaching out to people. You're already starting to or trying to figure out how to get better at this. So you're way ahead of where I was when I was in your shoes. So good for you. Grab a copy of the Trading Mind Wheel and reach out to me with any questions that you have. Let's see, what else do we have here? Riendra loves the comics about trading. Yeah, there's a lot of comics that I share about trading. Not sure if you guys, uh, well, over here on Instagram, you guys know all about the comics. On YouTube, you guys may not know, but yeah, uh, follow on Instagram, follow on Twitter. I share a lot of comics on those, a lot of trading comics. I will work with a great artist that we collab and come up with these ideas. Somebody on YouTube posted a comment over here. 4 times Pips says nice. Thanks 4 times Pips. I appreciate it. Glad to see some commentary coming in from the land of YouTube. That's kind of rare. All right, let's go through some more questions. Kunal asking about indicators. So when we're thinking about indicators and what types of indicators we want to use, the answer is that it doesn't matter which, it matters how frequent. So what indicators are we going to use? How frequently are we going to use them? We want to be consistent with whatever indicator it is that we're going to look at. We want to become as familiar with the indicators that we're going to use as we can. And the more frequently we use a certain indicator, the more knowledge we're going to gain about it. So, for example, let's switch the screen back over, and I'll bring my charts back up over here on YouTube. So, something that I noticed about trades that I take, and let me know if you've experienced similar. But when I'm trying to find a breakout for the trade that I'm interested in, and I'll put my annotations back on. A lot of people say that my charts are kind of messy, that there's a lot of stuff going on, but I just like to draw all over the charts. And the drawings mean something to me, and that's the only thing that really matters. Do these and the same thing should be true for you too. If you're going to put things on your chart, they should have meaning for you. So when I was looking at this chart, I saw this volatility contraction pattern. From left to right, both the price action is contracting and so is the volume. The final contraction was right over here, and it even contracted a bit more right there, right around that red line, that 50-day moving average. So when I wanted to buy, I bought in right over here. Now back to the question about indicators and understanding the nuances of indicators. Something that I noticed in as a great booster, not a requirement, but a booster for patterns that I'm looking at, is that when I'm looking to enter a breakout, generally speaking, the stochastics are already moving positively and starting to turn up. And you have that right here, right ahead of the breakout. So that's something that's showing me that more momentum is starting to come into this trade pre-breakout. And it's something that adds to the possibility of this working. And so far, this trade is working pretty well. I've gotten the first scale out. My stop is to break even more or less, and most of my risk is out of the trade. Let's see what other questions are coming in here. Hello from Colombia. Hello from India. Do I speak Spanish? Not enough to carry a conversation. I took Spanish in high school. I know a couple of words. But yes, not enough to really carry a conversation. Your opinion about divergences. Divergences lead to a lot of chop. Divergences lead to chop in markets. Divergences leads to chop in individual trades. For markets, we've seen some divergences here. Let's move the screen back over. So, and I'll take off all these annotations, hide the drawings. Okay, so what we're looking at here is major indexes. We've got the S&P, the NASDAQ, the Russell, NYSE, and Dow over here. And this is the IBD 50. I like to look at these indexes across time frames. So I'll look at them on weekly charts. I'll look at them on monthly charts as well. And I'll look to see how price is converging, diverging, if they're trending together, if they're not. When we start to see divergence among time frames, that's something that leads to choppiness. If we start to see divergences among the indexes themselves, that's something else that leads to choppiness. And we've seen choppiness the last really couple of months here, right? If we move this back around, all in here is a lot of chop. Doesn't mean that it's not tradable. It certainly is tradable. I've had quite a few winning trades in here, but it's a matter of what's the expectation? And is this the time to be making big money? The answer for that is no, in my opinion, or at least for my particular style. This is not the time to be swinging for the fences. This is the time to see, does the market transition? We've been in a transitional period for a while. Does the market transition into a smoother uptrend? And there's a lot of spots where you might start to rally and then hit resistance, and then another point where you might rally and then hit resistance again. the Nasdaq so far, and all the indexes really are in this transitional phase where it's at a point of prior resistance, right? So when price started to fall on Wednesday of last week, and then yesterday it spiked down to the 50-day moving average, people were starting to freak out a bit. But if we look at this, and I like to have different market conditions, red, yellow. You might see these. Don't really have time to get into what all the different conditions mean, but the application or how I use them has to do with sizing. So if it's a yellow condition, I'll be scaling up. If it's a red condition, then I'll be scaling down. So why don't we switch over to the S&P? I think the S&P could be a fine one to look at too. Yeah. Okay. So if we take this line and put this over here, you can see that when price started to run back up, it got to a point of prior resistance right over here. So price can do a couple of things. Price can break through, right? That didn't happen. Price can come back in, which did happen. And then when price does come back in, look where price is at right now. It fell below that 21-day exponential moving average, but where is it now? Well, price is right here. And is there anything that might give it support? Well, yes, there's this level where price broke above a prior resistance level, and then that's a potential floor. And then it's caught between a ceiling, and now it's back down to the floor. And that floor isn't just over here, it's also from over here and from back here as well. So, from my vantage point, there's reason for the market to bounce. There's also, if the market does fall from here, we have the 50-day moving average where it might get support. When there's multiple layers of support like this, it's something that can frustrate both bulls and bears because if you're a bear and you're trying to short over here, well, there's not a whole lot of room until there's could be buyers stepping in right around that 50-day moving average. If you're a bull and you're trying to get in over here and then price starts to run a little bit, then there's more overhead supply, people that were trapped from back here that want to sell and get out. So what do we do in these kinds of scenarios? Well, what do I do in these kinds of scenarios? I allow the stocks themselves to dictate what I'm going to do and what trades I'm going to take. If I find high quality, what I consider to be A-level setups, then I'll take those trades. If not, then I'll continue to sit and wait. And with that, we'll call it a wrap because it's already after 10 o'clock, and this is a show that's normally 15 minutes long. I don't think that it's been 15 minutes long in a while, but I want to say thank you for those that stayed. I appreciate you guys being here. And if you have questions, if you have other topics that you'd like to see covered on a future show, hit me up on social, Instagram, YouTube, Twitter, Facebook, LinkedIn. Go to marrowwealth.com. Write to me there. And I'll see you guys here tomorrow at 9:30 a.m. Eastern Standard Time. Take care. Much love. Peace out, everybody.